All right, joining me right now is the Managing Director and Vice Chairman of Pimco, John Studzinski, joins us right here in Davos for ET Now. Thank you very much, sir, for being with us.
Good morning.
Uh, a very good morning
Good
and a very
morning.
freezing morning to you. We've been speaking to a lot of people as far as the global uncertainty is concerned. What does this really mean for the world and all of that? But you're somebody who's got the biggest links with the largest fund managers, with the biggest investors. What are things looking like? As far as the risk in the world markets are concerned, what are those risks right now?
I think it's really a tale of two cities, a tale of two worlds. You've got the juxtaposition really of the macroeconomic environment that in the United States is still growing but slowing. You've had 37 quarters of successive economic growth, and we expect that to continue. In Europe, you've got a slightly smaller level of growth, but that is continuing, although the European political situation, which I'll get back to, is much more complicated. And of course, everyone here at Davos is talking about China having slower growth. China still has very high growth as an emerging market at 6.5% as reported. But I think from your point of view, when you think about risks, the bigger concern that the world is now focused on are what I would characterize as geopolitical risks. You know, historically we've always had one or two geopolitical risks, but I could probably list 4, 5, or 6 major geopolitical risks when you look at North America, when you look at the restructuring of Europe right now with the movement to the far right, the uncertainties of Brexit, the uncertainties of Macron's future, the uncertainties of Italy and Germany, plus you now have a lot of tension further in the Mideast. So we're very much in what I would call a geopolitical recession.
So let me just, you call it the geopolitical recession. You're obviously, and you believe that plagues the world today. What does this mean for investing?
I think what it means for investing is that we're in slightly a mode of uncharted waters. I think on one hand, in terms of some of the biggest prudent investors, they're very focused on the fact that they've done very well in the markets, both in the equity markets and in the credit markets over the last 10 years. So there's been a strong movement into cash and cash equivalents. People wanting to look at the market, waiting to see whether there is going to be a big correction over the next 1 to 2 years. We're thinking about most of the leading indicators suggest there could be a recession in the world in 2020, but you and I are both old aficionados at this. You know, if all the pundits are saying 2020, what that really means is it's either going to be 2019 or 2021, which is possible because there are new things going on in the world right now. And for example, there's enhanced productivity in a lot of economies, particularly the US economy, which we haven't taken into account before.
So how is the risk-reward environment really stacked up as we speak?
In terms of risk-reward?
Risk-reward environment for returns.
Well, I think you want to get your phone.
Oh, that's okay. You can carry on. I'll pick it up. Yes.
I think the reality is there's an increasing amount of volatility in the world. You're seeing that in the bond market. You're seeing that in the stock market, and I think whether or not the risk is being properly valued, I think it's early days for that. And I think when you talk about risk return, it's a very hard assessment because I think we're now, as I said, into uncharted waters from a geopolitical point of view. And when you look at geopolitical events, we haven't really had a major geopolitical event for a long, long time. So I think the markets are hesitant. But because of the power of the media, what you're seeing is a lot of overreaction in the short term for things. So whenever there's a major event now, you've got to wait for the markets to stabilize over 2 or 3 days. And that's one of the things I think people are being much more cautious about, not overreacting to some of the short-term geopolitical nuances that we're seeing in the market, including, for example, Brexit and the trade talks with China and some of the other nuances in the Mideast with Iran and Turkey.
So very quickly, I'm going to ask you this question on EMs versus DMs, and that's always a favorite topic. How do the emerging markets stack up right now vis-a-vis the developed markets? What is Pimco's strategy going to be? Is there more fund allocation that's happening to the EMs?
Well, there's always this traditional view that as the developed markets slow down, the EMs become more attractive. But I think one is looking very carefully at the EMs for the first time. We heard Bolsonaro's presentation yesterday, the new head of Brazil here in Davos. and we're looking around the world. And I think selectively, it's hard to identify an EM that's going to have an extraordinary amount of growth. I think one of the things that's interesting about Mexico, for example, is that Mexico, with the new leadership there, is very much going to become potentially more and more of a manufacturing hub,
Right.
because the cost of manufacturing in Mexico is half on a per hourly basis that it is, for example, in China.
So, John, let me just quickly turn focus to India. We're talking in an election year. The Modi government goes into election having done some reforms, not having done many others. How big an uncertainty is election going to be in an uncertain world in any case for India? And what is your assessment from a larger reform macro point of view?
Well, India is look, India is a very interesting country. It's benefited in the short term from a very tight capital account. It's a very well-run capital account. The banks, on the other hand, haven't had an excessive amount of capital to put forth loans. The recent Insolvency Act, sort of the India Chapter 11, I think is a very impressive move. A lot of people look upon that as in a very favorable light, and I have to applaud the government for that. But India is not really part of the global trade order. It doesn't have the same sensitivities. And also, remember, it's benefiting enormously from the very low oil price at the moment. So when you look at the election, I think my assumption is that, Modi has accomplished a number of things, but he clearly has more to accomplish. One would expect him to be successful. I know he's had a couple of setbacks. The BJP has had
right.
a couple of setbacks recently in the
State elections.
I guess it's called the
State
Hindi Heartland.
Hindi Heartland.
Having said that, there's no question he is going to probably be re-elected, but I would have thought he's not going to have the same majority that he's had over this last time period.
And what will that mean? What will a fractured mandate mean for decision-making reforms? And are investors nervous about that?
I don't think investors are nervous about it. I think, first of all, you have to remember Modi is someone that people respect. He did an exceptionally good job with Gujarat. I think what people would like to see with respect to Modi is, if he is successful in the new election, he appoints a larger team, because I think one of the challenges he's had is the complexities of India and the politics of India are far more complicated than the complexities of running Gujarat. Also, let's remember, India is still an agrarian society, and one of the issues is food costs have been very low, which on one hand has been very good from the consumer, but it's also been very bad for the farmers. And I think there are a lot of issues there in the rural area that Modi has to address, in his new administration.
So, John, a quick last question to you, and this has to be on a very tightrope walk that any government has to do between balancing fiscal concerns, being fiscally prudent, and doing something for the agrarian economy that you spoke about, which is going through a lot of pain. How tough will that balancing act be, and if they have to tilt in favor of one, which one should that be?
I think it's quite interesting. We're now dealing with this word around the world, populist.
That's right.
And the word populist often has a negative connotation because it implies pandering to a minority. But I think the most important thing to know about populism is the truth about populism is it's actually representing increasingly what is the majority. And I think in India you have a very large population in the agrarian, and I think Modi is going to have to deal with that and make sure that if there are reforms there that address the welfare of the farmer.
So, from an international investor point of view, elections, no elections, political establishment, this or that, you think makes no difference for India?
What makes no difference?
From an international investor point of view, this political establishment or any other political establishment really makes no difference. It's the market in India that counts.
I think the Indian market, remember, India has a lot of opportunities still in areas of property, in real estate, in the urban areas. And I think, as I said, on the financial services side, there's a lot of attractive opportunities there. So international investors are going to continue to watch Modi and what he does, because I think Modi now he's gone through his learning. He's gone through his pilot phase. He's now, I think, going to probably be a lot more prudent in how he takes the next stage of his political career.
John Studzinski there talking to us right here on ET. Now, thanks very much, John, for speaking to us. Betting big on another term for Mr. Modi. And of course, he believes the focus and the reform agenda is perhaps going to be very different this time around.